Hey guys, Chatukufa here. Look, I know what y'all been doing. You've been doom scrolling on X, listening to every self-proclaimed guru tell you to buy Bitcoin because it's safe. As you already know from my recent video, the crypto market is already at the bottom, waiting for an upcoming bull run. Because my money is already positioned, but now everyone is asking, what's the move? Do I try to be the next Michael Saylor and go all in for Bitcoin, or do I just throw darts at random altcoins and hope for the moonshot? Listen very closely, because I'm only going to say this once. I'm here to show you how to actually optimize your capital. I don't care about safe. If safe means leaving 3x or 5x gains on the table, most of you are playing not to lose. I'm playing to dominate the cycle through 2027. So let's look at the data because the data doesn't have an ego, unlike your favorite influencers. Let's start with the pivotal moment. Last week, I told you the market was at the bottom because USDTD was hitting a monthly top and getting rejected at a heavy resistance. Look at this line right here. Since the start of the bear market back in October 2025, USDTD has been hugging this upward trend line like a security blanket. It never broke, not once, even in the early 2026, you saw the strength everyone was talking about, staying above the whole moving average, respecting the zero point 0.5 Fibonacci level. You might think that meant investors were just staying defensive, but here's the twist. I'll likely be the only one on these platforms giving you the first signs of the shift. Look at this rejection under the whole line. That was the first crack in the armor. And with today's breakdown, the upward momentum from earlier this year has been completely lost. The defensive wall is crumbling. This suggests that the defensive positioning in the market is weakening. So, my expectation, USDT dominance is going to slide down to this middle zone. As that happens, the broader crypto market is going to see a very nice upside movement for the Bolivars. If we see a retest of this trend line, just a little kiss goodbye. That is your high quality buying opportunity. Capital is flowing back in, so stop overthinking it. Now, the Bitcoin versus the altcoin debate. I've said it before. Altcoins will outperform Bitcoin in the majority of this next bull market. Specifically, let's talk about Ethereum. I know it's been a lackluster. The Ethereum is dead crowd is getting so loud right now. Good, let them be wrong. The Ethereum Bitcoin hit monthly support back in April 2025. Since then, it is something massive. It broke out of a 3-year downtrend that started at the end of 2022. That is a structural shift you don't ignore. Right now, we're just retracing toward the smaller support area. This makes sense, right? Bitcoin usually leads the third phase of bull run while everyone is scared. But once the initial Bitcoin surge settles, I expect Ethereum to behave like this and significantly outperform Bitcoin. When Ethereum moves, the entire ecosystem follows. On the USD pair, it's a simple scenario. I want to see a little retest here. Maybe some consolidation before we aim for that 2900 level. That was the scene of the crime, the start of the breakdown earlier this year. We're going back for it. So, this is the last segment. I'm going to give you my personal spot portfolio allocation and the exact reasons behind it. I call this the 60-30-10 plan. This is not the retail moonshot portfolio. This is a deliberate, data-driven, institutional style construction built for a portfolio of size for the full cycle running until 2027. My core thesis is simple. We are entering a prolonged bull market that should last to 2027, and within that cycle, altcoins as a whole will meaningfully outperform Bitcoin. So first, I am allocating 60% to Ethereum only. ETH is my only major allocation because it's the highest quality altcoin with real institutional adoption, strong on-chain fundamentals, and a history of outperforming Bitcoin in the middle and later stages of bull markets. At this 60% weight, it serves as the core growth engine of the portfolio. It is high enough to deliver significant upside, but it's still far more defensive than pure mid to small cap exposure. Next, 30% goes to other altcoins, specifically small and mid cap only. This is the satellite bucket where I expect the majority of alpha to come from. I am deliberate avoiding Solana and BNB because I already have my heavy 60% allocation in ETH. This 30% is sized conservatively because the portfolio is so large. It is enough to capture meaningful outperformance if my thesis on the other's dominance and the other's BTC plays out. But it is not so large that the drawdown in speculative names become dangerous to the overall capital. Finally, 10% is held in cash and stable coins. This is non-negotiable dry powder. Even at a perceived macro bottom, I always kept the 10% in stable coins. This gives me the ability to buy significant dips over the next 6 to 12 months without ever having to sell existing positions to find liquidity. In a large portfolio, liquidity and flexibility are the real edge. So I know many of y'all might ask, why zero Bitcoin? While Bitcoin will probably hit a new all-time high this cycle, all the data I have seen so far tells me it is better from an ROI perspective to allocate more to Ethereum than Bitcoin. Remember my last video on Bitcoin dominance? The Bitcoin dominance regime is ending. This is the cleanest expression of the data. We're at the start of the bull market where all should lead. I've saved my friends a ton of money by keeping them from shorting Bitcoin at the wrong time, trusting the data works. This is my personal plan. I am not your financial advisor, and I don't care if you follow me or not. But I'm curious, what's your allocation? Are you still clinging to Bitcoin or are you ready for ETH revival? Let me know in the comments. Stay wise, trade with edge, and I'll see you in the next one.